Chapter 2. The use of key financial reports. By the end of this session, you should be able to discuss the purpose of the key financial reports and their use by a range of stakeholders. Overview. The accounting function in an organisation fulfills a number of important roles, least of which is the supply of information for a variety of uses and users. Here we shall consider the key purpose of financial reports and their use. Much of the information will be familiar to you from your previous studies of financial statements of limited company, management accounting budgeting, and management accounting decision and control. The purpose of financial statements. The main purpose of financial statements is to provide information to a wide range of users. The statement of financial position provides information on the financial position of a business, its assets and liabilities at a point in time. The statement of profit and loss provides information on the performance of a business, the profit or loss which results from trading over a period of time. The statement of other comprehensive income shows income and expenses that are not recognised in the profit or loss. The statement of changes in equity provides information about how the equity of the company has changed over the period. The statement of cash flow provides information on the financial adaptability of the business, i.e. the movement of cash into and out of the business over a period of time. Stewardship. Stewardship is the accountability of management for the resources entrusted to it by the owners or the government. The needs of users. All users of financial statements need information on financial position, performance and financial adaptability. Each group will need particular information. Users of financial statements may include investors. They need to know the ability of the business to pay its dividends and manage its resources. Management. They need the information to assess performance, take decisions, plan and control. Employees. They need the information to ensure they'll be paid and will receive their benefits. Customers. They need the information so they can continue to supply in the future. Okay, from that I'm guessing what they mean is the customer needs to know this information to ensure they'll still be able to buy their products in the future or get their service. Suppliers need the information to ensure they will continue to get paid on time. Lenders need the information to know that the company has the ability to pay their interest or repay their loans. HMRC need the information to ensure they do the correct tax assessment. And the public need the information as an aid to the understanding of profits. Legal requirements. The law requires that limited companies prepare financial statements annually. They must be filed with the Registrar of Companies and are then available to all interested parties. In the UK, the form and content of limited company accounts is laid down within the Companies Act. In the case of UK companies, the Companies Act 2006 contains guidance and rules on the formats for the financial statements, the fundamental accounting principles, and valuation rules. This is subject to regulations issued by the Accounting Standards Board, if the company is following UK standards, or the International Accounting Standards Board, if the company has adopted international standards. The purpose of management reports. Management accounting provides information for planning, controlling, and decision-making. Planning. This involves establishing the objectives of an organisation and formulating relevant strategies that can be used to achieve those objectives. Decision-making. In most situations, decision-making involves making a choice between two or more alternatives. Control. Output from operations is measured and reported or fed back to management, and actual results are compared against the plan in control reports. Managers take corrective action where appropriate, especially in the case of exceptionally bad or good performance. In management accounting, what are the key reports? The nature of management accounting reports produced varies considerably from one organisation to another, but they could involve the following. Budget reports detailing plans for future periods. Variance reports comparing actual to budgeted performance. Reports of key performance indicators. Management focus on what is important to the success of the organisation, or one-off reports considering individual decisions, i.e., for example, should we shut down a plant? Evaluating a management report. If you're presented with a management report and asked to discuss it, then you may need to consider some or all of the following. 1. The basis of preparation. Why has it been prepared? Who's prepared it? Could it be biased? Participation in the process, experience or qualifications of the preparer. 2. The methods used. Important if decision-making and use of contribution. 3. The figures used. Use of historic figures, verified via an audit. Future forecast or plans, any assumptions made, fixed, variable costs, impact of inflation, cause and effect relationships. Make sure you read the scenario carefully. And 4, the impact on people concerned. Target set, were they fair, stretching, achievable? Motivation levels. Participation in target setting, who was involved? Pressure incentives to meet targets. Who holds the responsibility? Has the budget been flexed? What is the tone of the report? User groups. The purpose of accounting is to provide information to users of financial statements. Many groups will use the financial statements, including the following. Management. Management will use the information in the analysis of revenues and expenses to plan and make decisions, compare actual versus budgeted results, and to measure key performance indicators. Shareholders and potential shareholders. Shareholders will need the information to identify how management use funds, and also to predict future performance based on past events. Employees and their trade union representatives. Employees and their trade union representatives will use the accounting information to identify safe employment, to assess the likelihood of promotion opportunities, and to ensure that wages can be paid. Lenders. Lenders will use the financial information to consider overdrafts, to look at the short-term payables, and to consider long-term loans and the security of loans, and to assess the ability of the entity to repay or meet their interest commitments. Government agencies. Government agencies will need the information to identify economic trends and to calculate tax liability. The Business Contact Group. The Business Contact Group, although I have no idea what that is, I've just added that by the way, will need the information to assess the viability for a long-term contract or to make a comparison to competitors. And the public will need the information to assess the impact on the local community environment and environmental pressure groups. End of chapter 2.